Hello and welcome for a live update. My name is Dave, and you're watching the Short Vol Show live. I'm just coming on for a brief update here. As I've said many times, I am not some sort of guru. I don't expect people to follow my positions or do what I'm doing, and in fact, I discourage people to do that. I'm not licensed to give investment advice, and so the point of my channel, at least in my mind, has always been to just show people the thought process and moves of an active trader. And in that light, I'm just coming on to give you a position update. I did bail out of my current short vol position yesterday afternoon, and let me just give you a couple quick reasons for that and what I've been thinking, and then you can get on with your day. The position I had on was I was long these way out of the money Jan puts. I bought them for 50 cents. I had 200 and something of them, and it kind of just felt like the position's been going nowhere for the last while. And although these options don't decay a whole lot, they do decay. The difference between the trade I put on right before Christmas, where I bought something for 25 cents and sold it for 50, and this, where I bought something for 50 cents and I'm just sort of sitting on it, it doesn't seem like that much of a difference between 25-cent option and a 50-cent option. But I have been kind of feeling the decay at the back of my mind of like $50 a day on the position. And that doesn't sound like a lot, but just all things considered, it's kind of, I have this in my mind, and I've looked at the charts in the past, and, this stuff could sit up here, and the VIX could firm up a little bit, and the puts could go nowhere for a long period of time. I don't quite understand the market right now. It psychologically, to me, with Apple like flirting with 300 and just Carvana up in the mid to high 90s, Tesla, what is it, 440, 450, 460. It just feels like the market's pretty toppy to me, and I just don't feel good about this position. And most of all, my main motivation when trading is to not lose money. And it's the middle of the winter, and I really don't feel like losing money right now. So I don't feel like my head's really in the game, and I don't get a good feel on this whole market. So I just bailed out. And I'll look for a better entry point here. I'm not sure if I'll re-enter in these VIX puts or do something. Wait for more of a situation where we are spiking to do something closer to the front month in maybe a UVXY or something. But either way, I did bail out of my position last night. And I just wanted to give you folks the update, those of you who are following my activity. So we'll see what happens. Probably, I'm anticipating that as soon as I bail out of my position, it will go, the VIX will go straight down and everybody else but me will make a ton of money. That's usually what happens. But for now, I'm out. And I'm happy about that just because, like I said, the motivation here is to not lose money. Making money would be a definite bonus, but I know when I'm out of my position, I'm not losing money, and I feel like my head's kind of out of the game right this second, and I'd rather just have the money safe than have it exposed right now. So that's where we are. Hey, Sean, good morning. And good morning to everybody else. I hope things are going well for you folks post all the holiday. Kind of back to work time for everybody, I suppose. I live in a resort area, and like nothing is going on. It's a ghost town right now. And, a lot of my friends and coworkers in a resort town, when you're in the peak of like the off season and nothing is going on, it's kind of like, everybody just kind of wants to like lay low and not spend a whole lot of money. So anyways, that's where we are right now. What's up, Manfred? New ideas. Yeah, definitely. There's tons of stuff out there. When I'm looking for new ideas to do with stocks and things like that, I really like to go and look on Do large do large options orders move UVXY? Uh, no. The short answer is no, they don't. UVXY is mostly moved by action in the SPX. Stuff happening in the SPX has a much bigger dollar value and a much bigger amount of money going on than like 100 or 500 option orders in UVXY. Also, when people are deciding that they want to do something in the volatility sphere of influence, they can pick different spots to do that. They can go to SPX put options, which are pretty liquid. They can go to VIX options, which are also kind of liquid. VIX options being options on VIX futures. They can go to VXX. But most big traders know that UVXY is not a very liquid spot, and they're not going to be able to, if they want to do 10,000 contracts, 50,000 contracts, they're not going to get them done at a decent price just going in the open market in UVXY. Now, if you've got a bigger order than probably a 500 lot in UVXY, the way they're going to do an options trade there is they're going to shop the order upstairs. So they're going to go to Schwab or Morgan Stanley or whoever, Goldman, and say, I'm looking to buy some premium in the VIX. And their traders upstairs might be like, oh, okay, well, I'm willing to sell you like this much Vega. And they might say, well, where do you want to put it up? On UVXY, in UVXY, in the SPX options, or and they might enter risk in different areas of where you could in the volatility sphere, but in general, 100 to a 500 lot is not going to move the markets. Everything translates in the end to the VIX futures, really, because if somebody comes and buys 500 calls from me in UVXY, well, what am I going to do? I'm going to turn around and try and hedge that. So I'm going to sell you 500 calls, which is going to get me shorts and volatility. I'm going to turn around and hedge that by maybe buying UVXY shares, which is basically the essence of your question. If I sell you 500 calls and I turn around and buy UVXY, essentially UVXY is going to turn around and buy VIX futures. So the VIX futures have enough liquidity to absorb easily 100 to 500 options, even if those were like deep calls, even if those were 100 delta calls or 100 delta puts. That is not going to move things at all. And just it's compared, UVXY is usually going to be moved by a movement in the VIX futures. To think of like UVXY actually moving the market, it generally doesn't happen that way. Generally what happens is the market moves in the SPX and they adjust the prices of UVXY. The repo, I think you're talking about, Sean. The Fed, what the Fed's doing is kept highly secret, and I don't have a real good handle on when they're going to start and stop doing that stuff. I'd be the wrong person to ask about that because I have zero insight other than what you can actually find yourself. Thank you, James Knight. Yeah, it's interesting. People that are actually taking a stand in Vega are not going to look to UVXY for liquidity, and options orders in UVXY, I mean, you might see it bump up slightly for a little bit, a few cents or something, but the market isn't usually going to get moved from the UVXY end. It's going to get moved from the SPX end, in my opinion. Yeah, I'll check out the graph in the Facebook group, Sean S. Let me just post a link just for some shameless promotion to the Facebook group here so that if you guys don't know about that, you can check it out. People are there like 24 hours a day. I'm trying to be more active in it, and try to keep the scammers and spammers out of it, which is which is like a full-time job, and try to keep this. Hold on, my screens are all going wacky here. Here we go. So SVXY, Manfred, is it's only 0.5 times leverage, so it's not a big player in the game. It's kind of like VIX light, I would say. So people who are looking to actually have leverage and make stuff happen usually don't use the SVXY just because it doesn't have that much leverage and doesn't have all that much bang for the buck. remember, you can use actual stocks as proxies for stuff. Oh, that's what I was going to say, Manfred. Just for ideas about stocks, a lot of times, like I will play some earnings plays, and just to keep up with what's going on and what's exciting at the moment, joining some sort of chat room. Now, I'm not suggesting you pay $90 a month to join Enhanced Investor or something like that, because I think that stuff's a waste of money. But being active either in a Facebook group or on Twitter or in StockTwits or something like that is going to alert you to kind of like what's going on today in the world of stocks. But another thing that does that is, for me, is just going on to like a scanner such as Black Box or Gorilla Trades. I was sponsored for a while by Gorilla Trades, which has some great. The guy's a genius stock picker, and so he's got great ideas all the time and just to give you a place to start at. But I do like to go on this bar chart and just let me get out of the way here and just look at highest implied volatility for options. As you know, I'm an options guy, so when I'm looking for action, I'm looking to the options markets. But I'll go on here and look at highest implied volatility. That's going to tell you who's paying a lot of money for options and where they're doing it at today. And there's not a lot going on here in the stocks right now. We're kind of out of earnings cycle right now. I see NEO, but NEO's only a $3 stock. I'm looking at this AMD. The semiconductor world is a world unto itself that there's a lot of experts in. I did used to trade Xilinx for a long time, but beyond that, if you do go to StockTwits, you can see market movers in there as well to possibly give you some ideas. I'm very focused just on doing the VIX and my one thing right now. It turns out I'm an awful stock picker, so I try to just stick to what I heard that SVXY has a higher risk versus reward than UPRO. Yeah, that's entirely possible. I would look at UPRO and other leverage products. I would definitely dig into if you're going to trade options on them, just dig into the liquidity of the options. I was looking at some oil ones like Drip a while back, and there is no liquidity in the options market in some of these things. Let's look at UPRO really quickly. And I'm going to pull up on my screen behind me here. I'm going to go to volume and open interest because that's going to tell you the option size. And you can see if we go to, I have the weeklies turned off on here. I got to turn those back on. But you can see there's some open interest here. The 70 strike being the at the money strike in UPRO. There's a lot of open interest way down because this is Jan. That's the main Jan options. A lot of open interest from before, way down at the 56 strike. But I believe you're talking not necessarily options, but just trading the underlyings. But yeah, I stay away from SVX. I've always stayed away from SVXY, truth be told. I was looking at it a little bit before it got nerfed, before they reduced the leverage on it after that. When was that? February 2018. I used to look at it back then a little bit, but I don't mess with it. I'm going for the more higher bang for the buck type ones. So anyway, for those of you who are following, I'm out right now. I have no positions. I'm also out of my my longs in the stock market for 401k and whatnot. I have been long the SPY, the USMV, and the IWM for quite some time, and I bailed on those positions. I used to trade some MJs. I'm bailed on everything. Being a market maker is a big topic, and it is it's a different game. I was trained how to trade backwards to a lot of the way a lot of you guys were, in that I was interested in the stock market, but I'd never done anything until I was basically hired as a professional trader and taught how to be a market maker, which, we were basically taught, don't get long any stocks, don't get short or long any stocks. You're going to stay neutral stocks. We're going to trade options, and we're going to try to get as much edge out of the trades we do in options, but we're not going to take a position long or short because we don't know what the market's going to do. And I was taught about that stuff a long time ago. I started on the floor. I got a job in Chicago, became a runner on the floor where I got like $300 a week and lived in a hostel. And I walked around from the different pits and said to people, does anybody need a clerk? I'll work for free after work if anybody needs a clerk. And this one guy said, well, come with me. One of my friends might need some help. And it turned out it was him that needed some help. Really cool guy, Mike Rogers Mudd. And he had this card where he'd have all his options trades, and I had to write down, his trades and check them versus this other pieces of paper and stuff. And then he was on the same floor as this company, and I got involved with this company. Anyway, I'll try to do some more stuff, James, about being a market maker and what it was all about and what we think about making markets. Things have changed a lot. Now stuff is very much computerized. However, it's still the same principles are involved. It's not like physics changes just because of you can't change the mechanisms that make the market go around just by switching platforms, basically. But back then, things you could, my goal as a market maker was to move stuff out of, make it as out of whack as possible. By that I mean, like, if somebody started buying one particular option, let's keep raising the price. If someone's selling some other option, let's lower the price of that one. Let's move stuff out of being the right prices as much as possible in our favor, and let's anticipate what's happening ahead of time, and let's figure out how to make as much money as possible, because when you're a market maker, you're forced to do all these trades you don't want to do, because if everybody's coming and buying stuff, then you've got to be the one that sells it to them. So you're stuck with the opposite. Imagine like what your dream position would be. Maybe when we're talking about this, like, this VIX stuff. Oh, my dream position is I want to be, I don't know, long. In Apple, my dream position over the last year would have been to be long Apple and short out of the money calls or something. Whatever your dream position is, the market makers have to take the opposite position. So I was left with these garbage positions all the time, and I just had to kind of scramble out of them. And sometimes you get stuck, but the thing is that being a market maker, you've got a lot of pressure on you. My expenses as a market maker, and this was back in the 90s, my expenses were about $200,000 a year. So, I'd have to successfully trade $200,000 a year to cover my expenses before I could get into any real money. And that's a lot of pressure. You have the advantage of the bid-ask spread, but you've got to things have to work out for you, and a little luck never hurts in the trading world. So there you have it. The conditions change. All right, so I'm keeping this short and sweet. I've already gone way too long. Thanks for watching today, and I will see you soon. This has been your position update on YouTube.